Hey, what's going on, guys? It's Marshall back with Bids and Offers with a new YouTube video showcasing a trade that I took today on the S&P 500 E-mini futures, getting long down here at these 53.14s, speculating on price coming up and making money, getting out at these 53.33s for about 20 points of profit on just about 4 points of risk, about a 5-hour trade. I want to show you guys, number one, how I found this trade, number two, how you can take a trade just like it yourself, and I'm going to answer 3 other questions that I also have in the course of this video. And by the end of this video, you're definitely going to have a slightly better understanding of how the market moves and what happens behind the candlesticks. So essentially, I want to get right into it. And this is the trade that I took today using. I highlighted the areas that I entered and exited with these ellipses. This first entry right here was actually over here, as you can see, this tiny little blue marker and this buy. I actually got long in here, speculating price would come up off of this negative delta. I'll get to that in a minute. But I actually got stopped out for break even right here. That's why it says sell one. And then I hopped back in long because I saw the same confirmation after price dipped. So I want to show you guys basically what I saw on the order flow and also on key levels in order to develop the area of interest that I was looking at to try and play the market, because you never want to play the market blind. You always want to have some level of understanding of the higher time frame picture. So we're going to go to the 15-minute over here, and I put this arrow in price. So essentially, yesterday close, we fell pretty hard from these 53.63s all the way down to these 52.50s flat. So that was a pretty damn hard fall. And off of this zone, we essentially rallied pretty hard, and then we closed, and then we had this consolidation range that got put in. That's why I drew this level here, this zone here. So this consolidation range, essentially, there were buyers in here that were playing the market higher after throughout the evening, and then this morning, with price dipped all the way back down into the zone where the buyers initiated their movement upwards from, and that zone lies right about in here. So the price actually came down and touched it. As you can see, each time it touched it, it actually bounced right off of that zone. And each time that it bounced, there were clear indications of a larger market participant putting size on there, speculating that price would go up. So essentially, my job was to identify the other market participant and kind of follow in the footsteps of what I think, his trade idea is. So basically, you saw the 15-minute time frame, how we're in this demand zone from yesterday close consolidation, I guess you call it. Yesterday evening, ended at about 8 o'clock. So we're going to go back to the 1 minute here. This is the volume profile. I draw this from 9:30 open to whatever the current market price is. So if we go back to this candle right here, I'll tick over 1. If we go back to this candle right here, where I entered again on the movement down after getting stopped out for break even, this is actually all of the information that I would have right here. This is all the volume profile information. So this shows you the volume at price, like this, sideways, at each price, all the volume accumulated at price, and all of the delta accumulated at price so far since 9:30, because I have it drawn starting there. So it shows you the volume in a slightly different way than you can see volume down here over time. I don't really like using volume over time as much as volume over price, because what price tends to respect are levels on the volume aspect of side of things, because these areas are either contested, they're very well traded, and a lot of participation happens. And we also have statistical reasoning to bring into the perspective here with how I create trade ideas. So essentially, this 9:30 to current market price volume profile tells me 3 things. Number one, the VPOC, the highest volume traded price, is all the way up here at these 53.24s, okay? So most of the time this morning, everybody traded the most shares right up here, the most contracts up here at these 53.24s. Price is all the way down here now, okay? I already tried it once down here. I'm not going to show you that. I'm just going to focus on this entry because this is my final entry. But price came all the way back down into this level after having created this low here and this negative delta. You see this little red bar that came in at these 53.13s? What do you look at over here? This is a footprint chart. This shows you all the volume at price, like it's candlesticks, but this is a 32 tick range. So an 8-point chart. So each one of these candles represents 8 points of price movement. So when we came down into this level, look at that on the right, 53.13. You see this red bar here? This shows you on the on the footprint chart, a negative 793 delta. There was almost a negative 800 delta in this bar. This tells me that there were a lot of sellers hitting the bid here, and negative 27% delta on this bar. There were a lot of sellers, right? But look at what price didn't do. Look at what price did. It went up. It bottomed down here and then shot right back up. I watched it in real time. Came right back up above this and immediately started moving upwards. That tells me that there are buyers in the market. If there was negative 700 delta and there was not a passive buyer here, price would probably be all the way down here, right? But because that buyer was sucking up those sellers, he had an agenda. His agenda was for price to go up. So I'm going to pull this over here, and you can look at the second time that price came back down into this area right here. Look at what happened again. We have this negative delta. We have this little size indicator here of 107 size that came through on this single trade. It's a trade indicator. So there was another person willing to put more size on just 2 points below him. And then look at what price did after that. It went up a lot after here, all the way up to here, right? I got long in here just before this candle was created. And I basically I did actually let the position run against me a little bit, but I needed to give it a little bit of breathing room because I'm asking for 20 points in a volatile market. So essentially, price came all the way back up off that level again. That tells me that this passive buyer really wants the price to go up. And there's market participants that are getting long also seeing that, and price is coming up. So I get stopped out for break even right here at these 53.14s. Price comes back down, it stutters right here. I see it turn red. I see the negative delta come through, and then price starts to return back up. And then all of a sudden, this negative delta bar switches to green, and I see price starting to bid up through here, and all this red turning to green. And I see buying participants starting to enter the market. I get long right here as quick as I can at these 53.14s with my stop down here at these 53.10s at low a day. Saying that, hey, if price comes back down below these levels and I don't see any large size that gets put on by passive buyers, I'm going to get out of the market and accept a 4-point loss. I'm speculating that price is going to come back up. Let me draw this forward to my current entry. Speculating that price is going to come back up above this cash open at 931, this high a day up here at 53.31. There was a zero print that I'll show you guys in a second at these 53.33s on this move down right here. So if I zoom in on this volumetric chart, this footprint chart, you can actually see the zero prints that got put in. Now, don't mind the zeros at the top or bottoms of these candles because those don't matter. It's only the ones on the inside of the candles that you have to look at. So you see this last zero print at these 33.75s. This means that when price moved down through this area, nobody on the bid got filled. There was an unfair market participation. The auction was misprinting, and nobody on the bid side of the market got filled here, which tells me that because of the way misprints work, the market tends to gravitate back towards these areas in the short term because of auction market theory. And these areas tend to get filled in because the market is an auction and it likes to fill every single market participant's order, whether they had it there or not. Somebody's going to want to play price back there and put orders in there to fill in the gap. Okay, so what I saw down here was a passive buyer. I got long with this passive buyer, and the price started to come up like this. I moved my stop to break even. I targeted this zero print up here because of, number one, that misprint that has still remained unhit. Market opened, came up to here, did not hit it, and moved all the way back down. And we have most of the volume accumulated on the day much higher, about 10 points higher than where we currently are down here. I'll show you like what it looks like in real time, right? So we have all the volume up here. We have VWAP up here, volume weighted average price. We have this misprint, and we have this passive buyer down here. And we are in this zone, this consolidation range that put in a 60-point rally overnight that we came down into to retest. So you know what I say in my head? I say, hey, I'm going to get long because everything is kind of lining up to me right now. So I get long, and look at what price does. It comes all the way back up into that level, and it hits it clean. Okay, I have a recording of this trade. I might post it. It's kind of low quality because I forgot to adjust the settings on it, but I might show that, just showing you guys like in real time what this footprint action looked like down here where I entered. Wait, let me just zoom this over. Where I entered right here, I'll show you guys what that looked like. But basically, yeah, that was today's trade. Asking for 20 points of profit on a risk of about 4 points is a 5R multiple. Okay, that's pretty good. I like that because I can take the same setup 5 times with the same dollar amount of risk, and I only have to be right once, and that one winner will pay for all my losers, and I'll be break even. So if I can take this setup, if I can win this setup like half the time, I'm making good money. So this is just one of the setups I take. I showcase a lot of the other ones on my channel. I like reversals. I like trading only the E-mini S&P 500 futures because I like the way the instrument moves, and I'm comfortable with the futures instrument. So basically, I have a couple questions that I wanted to answer in this video that a lot of people have been asking me.
What was special about today's trade?
So today's trade I really liked because it was a classic textbook reversal setup, putting myself in the shoes of a larger market participant and looking at the price action from a larger time frame perspective.
What does the chart on the right show?
So the chart on the right shows, I kind of mentioned this earlier, but I'll go a little bit more in depth. So this is called a footprint chart. And right now I have this footprint chart set to display bid and ask data, which is essentially just the bid and the ask, where the bid is if you are willing to sell the market, you hit the bid. And if you're willing to buy the market, you hit the ask. So on the right side are aggressive buy market participant orders, where people are willing to lift the market higher. And the sides on the left are people that are willing to hit the market to bring it lower. So buyers and sellers. And all this is volume. This is shares traded, contracts traded. This is a 32 tick range chart because each one of these candles represents about 8 points of price action. So this is not a normal time chart. This is a range chart. So that's why you see 32 range up here. So basically by looking at this chart, I can see people buying and selling the market in real time, and I can watch people enter the market and see positions get defended, which can allow me to put myself on the right side of the market more times than not.
How can I use order flow to improve my trading?
So when you come over to order flow from like any kind of, I'm not like it's a topic, it's just the way the market works essentially. When you start learning about this after having tried to learn like classic, candlestick price action and just regular zones, and not knowing like how to put yourself with other large players in the market, and not knowing like how to use mean reversion theory and auction market theory, you really can like skew a lot of your data, and it's really hard to understand what's happening in real time using just a candle chart like you have over here. I'll just drag this out for a sec. Like if you're just looking at this, it's really hard to understand what's going on here, right? What happens when price comes down into this level? What tells you before this happens right here, this little pop up, what tells you that it's going to stop here? Like what do you see using this chart? You can't really see anything other than the VWAP, this blue line, this 233 SMA. Fibonacci guys know about the 233. So this dip here and this bottom, how do I know that that's going to help support price for hours to come? Because by using order flow like this over here, you can see bottoms like that. You can actually see large buyers get into the market, and then positions get defended once, twice, and then 3 times, and then 4 times. And then each time price comes down, you can see that sell volume coming into the market rather quickly, but the market's not going down. That's a classic absorption reversal setup that I'm showcasing in this video. There's a lot of other ways that you can use order flow to confirm your entries and spot continuations and like spot large players. But basically what I look for in reversal is when there's a lot of sellers down at a low and they're really trying to bring the market down, but there's bids that keep reloading. There's people willing to put a lot of size on the bid, where they're willing to buy the market in large and defend their position every time price comes down into that. This tool allows me, this is just the footprint. There's other ways of looking at order flow. I just use this in my videos for right now. But this footprint allows me to see pretty much the heartbeat of the market every single second. So, yeah, that's pretty much all I have for the 3 questions for today's video. But if you guys have any more questions, put them in the comment section. I will answer every single one. Don't hesitate to DM me. don't hesitate to reach out and ask about a setup or maybe a zone that you have or a trade you took. I'll try and get back to everybody. I am no perfect man. I take losers. I'm actually going to post a video pretty soon about a bad trade that I took recently because of the way that my head worked through it. I actually held it past my stop loss a couple points, and then I had to manually close it, and I was pretty upset about that trade. But anyway, I'm rambling. That trade will be showcased, and I want you guys to just see, typically this is like 90% of my setups here. This is how I trade using order flow and key levels. You can go back to my last few videos and see the other trades that I've taken using this exact same repeatable system. This trading style, I mean, everybody has their own style, but this is what works for me. It doesn't necessarily have to work for you. This is just how I'm trying to explain my way of thinking. And I know there's a lot of misinformation out there right now regarding, you know, candlestick patterns and all this ICT, SMT stuff that's coming out. It's all garbage, to be honest with you. Like, price action is price action. However you look at it is, you know, up to you. But there are reasons behind why price moves, and I'm going to make it my mission on this channel to show you guys all the reasons behind these moves and how I can spot people in real time getting in and out of the market to make money off of them consistently. Thank you guys for watching. I really appreciate all the feedback I've been getting. Really appreciate you guys watching all the way to the end. Go follow me on my Instagram at Bidsandoffers. I post a lot of stuff on there that you guys will not want to miss out on. A lot of trade recaps, a lot of informational posts, a lot of stuff about order flow trading, etc., etc. Follow me on TikTok at Bidsandoffers, X, all the same. So I will have another video out very soon. Thank you guys for watching. I appreciate it. And have a nice night.